Of all the tax systems in the world, Canada has one of the most complicated tax systems with multiple different tax brackets and different ways things are taxed. If it's income, it's of investments, if it's a dividend. There's so many things that you need to know to try and figure out your taxes. And in this video, we're going to explain exactly how tax brackets work in Canada so you can figure out exactly how much you're being taxed. And by the end of this video, you'll know exactly how it works so you can determine how much you need to pay in tax at the end of the year. What's up, guys? For those of you who do not know me, my name is Philip Sutter. I'm the founder and CEO of Affinity Life, where we've helped hundreds of Canadians find the right life insurance coverage at the right price, all from the comfort of their own home. So if that sounds interesting to you, I'll put the link in the description below and you can check it out. But without further ado, let's get right into the video. So I think that tax brackets are one of the most confusing topics for Canadians. Like, I remember years and years ago, like a decade ago, when I was working at a job, there was always this discussion like, well, we don't want to make too much income because if we make more income, then we'll be taxed more and then our tax rate will go up and all of our income that we've earned will be taxed at a higher rate. So we don't want to earn too much. And I think tax brackets in general are kind of confusing. So yeah, by the end of this video, you'll have a firm grasp of how it works and understanding average tax rates versus marginal tax rates. So we're only going to be talking about personal tax rates in this video. We're not going to be talking about corporations. This is just for individuals. If you guys are interested in another video about corporate taxes, I actually made another video, and just drop a comment below asking for corporate taxation and I will send it to you. Now, the way that these tax brackets work is there's essentially two different taxes that are levied upon you on your income. We have a federal tax and then we have a provincial tax. So depending on what province you're in here in Canada, that could be different, of course, from province to province, but the federal one is fixed. So no matter what province you're in, you're going to have the federal one, and then you need to look up what the provincial one is in your province. So for me, I'm in Alberta, so I'm going to be using a lot of Alberta rates today just because, of course, that's where I am. But essentially, you'll have these buckets of income. So for example, again, it'll be maybe $0 to $50,000, and that'll be a certain percentage. And then that income in that bucket is just taxed at, let's say, 10%, okay? And then after that, there'll be another bucket where it's 50,000 to maybe 75,000, and that is going to be taxed at, let's say, 15%. Now, the previous income from the previous bucket doesn't get taxed at that higher rate. It's just whatever is in that bucket, and then it goes up to the next bucket, and then it goes up to the next bucket. So it's not like any of your past income is being taxed at a higher rate. It's just the next dollar that you earn. So I'm going to go through an actual example at the end of this video, and you guys can get a really good idea of what I'm talking about here. I do want to dispel the misconception that if you are in a higher tax bracket, all your income is taxed. That's just simply not the case. Now, when you're trying to calculate your taxes, you're going to be using what's known as your gross income, okay? And now there's different types of income, like I mentioned at the beginning of this video. There's your income that you could get from your job. That's, of course, a salaried income. There's self-employment income that maybe you're getting from your business, maybe your corporation, or maybe you have a sole proprietorship that you're running. And there's investment income. Now, investment income, like I mentioned, it does get a little bit more complicated because investment income, there's different types of investment and they're all taxed differently, and they have some corresponding tax deductions and tax credits that go along with it. For example, capital gains is only taxed at 50%. Dividends have a corresponding tax credit that goes along with it, and interest is taxed at 100%. So I'm not going to get into investment income in this video. I am just going to be talking about regular salaried income. Now, once you get your gross amount, there are some tax deductions right off the bat that every single Canadian is eligible for. So there's two different ones. The first one is a federal tax credit, and this is what's known as your basic personal tax credit. So the federal one in 2023, and by the way, all these numbers are 2023, the federal one is 15,000, and I'm going to show you how that number actually looks going on. We're going to do a calculation here, but it's 15,000. And then the provincial one, you also get a provincial tax credit, and that's different depending on what province you're in. But here in Alberta, it's $21,003 for 2023. And so you need to take your gross income and then, of course, subtract your deductions that you get from it. And I'm going to go over an example here later on in this video, and you'll see exactly what I'm talking about. Okay, so one thing I want to talk about before we get into the example here is average tax rate versus marginal tax rate. Now, you may have heard these terms thrown around before, and you know, I do a lot of different tax videos and people get confused about average tax rate versus marginal tax rate, and I get some funny comments. But here's the thing, let me explain it to you so you understand exactly how this works, because you hear these terms thrown around and you have no idea what they mean. So marginal tax rate means, depending on what your income is, what would the next dollar cost in taxes? So if you're 50,000 in Canada, we have what's known as a progressive tax system, meaning that the more we make, the more our taxes are going to be. So if you make, 30, 40, 50, 60,000, your taxes are going to be maybe very little. As you make more, 80,000, 100,000, 150,000, your tax rate is going to get higher and higher. And now remember what I said, it's only going to be in that specific bucket that is taxed. So your marginal tax rate is essentially what would it cost if I took one more dollar out. So if I'm at $80,000, what's my marginal tax rate if I took $80,000 and $1 out? What are you paying on that extra $1? So it's not what you paid on the first $20,000 or $50,000 or anything like that. It's what would the next dollar cost. That's marginal tax rate. Now, average tax rate, on the other hand, is essentially once you add together all the taxes that you pay and then you divide that by what your total income is, that's your average tax rate. So, here's a quick example. If you made $100,000 and all of your taxes were $25,000, your average tax rate would be 25%. However, your marginal tax rate would be 30.5% here in Alberta, meaning that if you took one more dollar out, you'd be taxed at 30%. So that's the difference between marginal tax rate and average tax rate. So let's just go through a few of these actual brackets so you can understand what I'm talking about these buckets. So here in Alberta, let's go through the Alberta provincial tax brackets first. So you can see here, the first $142,292 that you get, I'm just reading off the screen here, is going to be taxed at 10%. And then over 142,000 up to 170, it's 12%. 170 to 227, it's 13%. 227 to 341, it's 14%. And then over 341,000, it goes to 15%. So that's what I'm talking about when I'm saying buckets, okay? So that doesn't mean that once you go over 142,000, everything before that is now taxed at 12%. No, it's just anything up to that certain amount is taxed at that percentage, and then the next bucket is going to be taxed at the next bucket percentage, okay? So that's provincial. Now let's go to federal, because you need to add these two together to get your total tax rate, okay? And we're gonna go through an example, and I'm gonna show you exactly how to do this online in like 3 seconds, and you can just instantly see what your taxes would be. So federally, the first $53,359 is going to be taxed at 15%, okay? And now after that, it goes 53,000 up to 106. That's going to be at 20.5%. 106 to 165, it's going to be 26%. 165 to 235, it's going to go up to 29.32%. And then over 235, it's going to be 33%. And so you add these two together to get your total average and total marginal tax rate. So let's go through an example here so you can understand what I'm talking about. I had an example, and we're going to do this manually so you can see exactly how the numbers work, so you understand what's happening. So I'm just going to read off the screen here. We're going to go over someone in Alberta making $80,000 a year. Now, how you calculate this is you need to first do the provincial, and then you need to first do after that, do the federal, and then you add those two together to get the total taxes paid. So if you remember from those tax brackets, in Alberta here, the first $142,000 is at 10%. That's quite easy. So if we go to our example here, $80,000 a year, so $80,000, that's going to be in that first tax bracket. That is going to be taxed at 10%. So 10% of 80,000 is $8,000. So that's the first step. That's easy. Okay, so we have 80,000 times 10%, that gives us 8,000. Now there's one more step that you need to do, and this is where it gets kind of complicated, but don't worry, I'm gonna explain it to you. I mentioned that we have those personal tax credits. So there's a federal personal tax credit and a provincial one. And this is essentially, you can make up to this amount and basically pay zero tax. And then if you make more than that, this is going to be a tax credit that you get. So I mentioned in Alberta here, that personal tax credit is $21,003. So how you do the math on this is you would go $21,003 times whatever tax bracket that initial tax bracket is. So here in Alberta, it's 10%. So $21,003 times 10% gives you $2,100. I rounded off to 3 cents. Now that's the exemption. That's our tax credit that we can take off from our provincial taxes. So we had 8,000 and now we have that tax credit of 2,100. If you subtract that, you get, I have here 5,899.7. So I guess I put that 3 cents in there. You basically get $5,900. So that's going to be your total provincial taxes payable, pardon me. So pretty easy to understand so far. So we have our provincial taxes that we have paid here. So we just took the amount minus that personal tax credit. That's our total provincial taxes paid. Now let's get into federal taxes. So again, we're still going to be that $80,000. So we have to do it for the province and then we have to do it for the federal. So $80,000. And if we go back to our sheet here, so we see the first $53,359, and that's that first tax bracket for a federal rate, is going to be 15%. So let's go, okay, 53,359 times 15% gives us $8,003.85. That's that first bit. Now we're going to go to the next tax bracket, which is 53,000 up to 106,000. and that's at 20.5%. So all we're going to do is we're going to take that 80,000, that was our original amount. We're going to subtract it from that first bucket, and that first bucket was 53,000 and some change. So if you subtract that together, you're going to get $26,641. That's the remaining amount that is going to be in that next tax bracket. So you times that amount by the next tax bracket, which is 20.5%, and that gives you a total of $5,461. So if we add those two amounts together, the 8,000 and the 5,400, we get 13,465 together. So again, we had that first tax bracket or bucket at 15%, and then we had the next bucket at 20.5%. So you apply the first bucket to the first amount, and then you apply the next bucket to the next amount, and then you add those together, which gives us $13,465. Now, here's the thing though. Remember, we have that personal tax credit that we have available. So again, we're going to use that. The 15,000 is what it is federally. So I know it's like difficult to kind of, because all the provinces are different and federal is different, and it's kind of complicated to add it all together. However, here we go. So the personal tax credit federally is 15,000. So we're going to take that 15,000 and we're going to multiply it by the first tax bracket, which is 15%. And that gives us $2,250. And now that's a tax credit, so it's going to reduce those taxes payable. So if you reduce that from what the taxes were, is around 13,000, you get total federal taxes of $11,215. So if you add that together, $11,215 with the provincial taxes in Alberta, which was $5,900 or so, you get a total taxes paid of $17,115. Now let's look at some things here, because remember I said there's the average tax rate and the marginal tax rate. So if we look at this example, the average tax rate for this is 21.4%. So if you went 80,000 divided by 17,115, that's the average tax rate. That just means what's the average tax that we paid. But the marginal tax rate, that's what we would pay if we took out one more dollar. And that here in Alberta is going to be 30.5%. That's the difference between average tax rate and marginal tax rate. Now, if all that sounds incredibly complicated to you and that was way too many numbers and you're like, this is a waste of time, let's not ever do that. I'm going to show you guys here. I'm going to share my screen right now, and I'm going to show you guys a way that you can go to a website and you can put in different amounts and you can see exactly what it would be from an average tax rate, marginal tax rate, provincially, federally. You don't need to look up your province or anything like that. So let's just go into it. So this is called taxtips.ca, and essentially it's a wonderful website. There's tons of information on here, and there's this really good calculator. So you can see here, we're in 2023, employment and other income, that's salaried income. So let's see here. Well, let's put in 80,000 and see what that comes out with. And you can see, there we go. So Alberta, total taxes payable is 17,115. Average tax rate 21.4%, pardon me. And then marginal tax rate 30.5%. So you can see this is an incredibly easy way to find your taxes. You don't have to calculate it by hand, but I did want to show you how tax brackets work so you can wrap your head around the difference between average tax rate, marginal tax rate, and the different buckets that you would be in. So with all that being said, I hope that you guys enjoyed this video. I'll put links to everything here, all the different calculators and the tax brackets in the description below. And if you guys are enjoying this content, all I ask is that you give it a thumbs up, and I'll see you guys in the next one.